Welcome back. Let's turn our attention now to the commodity markets. Manisha is joining us in the studio. Manisha, gold prices, have they hit 1 lakh? If you go to buy now, go to the store?
Oh, well, absolutely, yes, Rima, and I'm going to exactly show you that calculation. Well, let me start with the international prices first, and we are trading at an all-time highs above $33.85 an ounce. I mean, this is an all-time high, and this is the 15th time that you have seen an all-time high above $3,000 an ounce. And my next plate shows you exactly that, the calculation for the Indian markets. So we have seen the gold prices open at an all-time high of 96,745 rupees per 10 grams. Now, this is the price for 24 carats. This is a price which doesn't have anything added to that. But I'm going to add 3% GST to that, because if you go out and buy gold in any form, 3% GST is basic. So with that, it's at 99,650. And if you're buying gold, you will have to give a minimal making charge, even if you're buying a coin or a bar and jewelry especially. So I've taken a minimal 10%. It's much higher at this point in time, but 10% of a making charge on that. And the gold prices are at 1,09,000 rupees per 10 grams. I mean, yes, it is 1 lakh now in the physical markets, and this is a basic price. If you're buying jewelry, anything more than that, you're going to be paying much higher than that. For the Indian markets, for most of the Asian markets, by the way, there are reports that the physical or jewelry buying clearly has been on a decline. I have been speaking to some jewelers, and they tell us that 30 to 40% of a decline in jewelry buying is what they have faced in last couple of months. And the exchange jewelry or the scrap jewelry really seems to be coming into the market. So people are, one, making profits, and second, they are selling their old gold, buying newer gold, or just selling gold because the prices are so lucrative at lakh rupees a 10 grams there. Now, the reasons why you have the gold prices running higher, one is, of course, the dollar index, which is trading at a 3-year lows below 99 now, has been one major absolute recipe for the gold prices to continue to go higher. And then Trump ordering investigation on critical mineral imports has added more uncertainty, and thus that premium. The third thing is about the European Union, where we saw an interest rate cut coming in on Thursday, and that is higher gold yielding. So we have seen gold buying reports coming in from the European Union. And then Trump's statement on firing the US Fed Powell has just added yet another more fuel to this premium that we've seen come in for the gold prices. I want to take you through a report card to show you on what gold prices have done. So on a weekly basis, we are up by 5%, 12% up in last month. And in this year, now we have surpassed on what kind of gains that we saw in previous year. So last year, the gains were 28%. We are up 29% in 2025 already. And the last 12 months have given you 45% returns in case of gold prices there. And the view from here on does look that the momentum will continue higher. Deutsche Bank, Goldman Sachs have talked about $3,700 an ounce and much higher levels if that level also gets broken. Bank of America, well, that level of $3,350 has been taken now, and Citi's talked about $3,500 by the end of May. $35 to $3,700 an ounce is a view that has come in from UBS, De Beers, Swiss Capital, SD Bullion. I was talking to them last week, and they said $3,500 by the month of May. And then for the month of June, July, August, in that quarter, perhaps some profit taking could come. But next couple of months, with the kind of uncertainty, you're not going to short gold.
Well, I think we had Ed Yardini this morning talking about 4,000 by the end of the year. Possibly. I mean, it was not a forecast, but he said, well, it's possible. Thank you very much for joining us. So gold very much at the center of things in terms of what's doing very well.